Welcome everyone to the 2025 market crash. And I'm here to show you exactly how you can make money in 25, 100% guaranteed way for you to make money during this market crash. So I'm going to go show you all the way from the top. Okay. First, detach yourself from the portfolio. So I remember when I started investing, which is in 2020 during the pandemic, all the stocks were falling. There was nothing that was going up during that time. And for me, it was easy to withstand all of the declines because I didn't own any stock. So anytime the market dropped, I was happy because the next week I was able to buy more stocks. And you have to take the same attitude in terms of your portfolio. The reason why it's so painful for you right now is because you own stock. So just imagine a situation where Big Macs are on sale, 50% off, right? If you hear that news and you're hungry, that's good news. But if you own 10,000 Big Macs that you're trying to sell, that is very bad news because you've just lost half your money. So the best way to avoid that pain is to act like your current portfolio does not exist. This 49,000, I'm looking at it as zero. I'm starting from scratch. I'm not, that doesn't mean I'm going to sell it. I'm literally just going to leave the stocks as they are, and I'm going to start buying as if I'm a new buyer in the market. That will guarantee that I make the most money as possible and I can take advantage of the declines that are coming. Step two, do not sell. This one is very important because, and I learned this because, again, from the 2020 crash, there were a lot of stocks that were 50% down, and I was like, these companies are never going to come back up. But guess what? 6 months later, they were going up and they were going up. The reason for that is because as long as the business is functioning, right? Even if the forecast for that business is not good, as long as it's functioning, as the stock market recovers, the stock is going to recover as well. I will give a warning for this one because there is one stock I remember that did not make it as back up, and that's American Hotel Income Property. I remember looking at this stock in 2020, and I remember it was down like about $2, right? At $2, and I was like, this thing is definitely going to come up. And as you can see from the chart, it did come up, but eventually it went down, mainly because the business model for this company was not productive. It was not going to work for the future. So I will say just be careful. But as you can see, again, the stock will always go up. Remember, this is when COVID, all of the travel was at an all-time low, and still the stock went up. So remember, do not sell. Third point, to lower your expenses. This is very, very important because what needs to happen is you need to have cash flow in your portfolio. That means every month after you receive your salary, you want to make sure that you've lowered your expenses so you can continue making deposits into your account. For some people who get paid bi-weekly, that means you can buy stocks every 2 weeks. For some, for example, me, I can only buy once a month because I get paid once a month. What that does for us is it allows us to dollar cost average because each month I'm getting an info, I buy. The next month, I buy. So this takes out the anxiety of timing the market because if the stock market is at an all-time low, I'm buying. It goes up 5%, I'm buying. The key thing is right now we are in a dip, and if we continue going to the dip, we're going to buy. You dollar cost average, and by the time of the end of this year, when this crash is over, whether it be this year or next year, at the end of this, you will have a strong base for your portfolio so that when the market does go up, your gains are that much greater. Just imagine if you had those 2024 returns, that 20% return that we had in the market. And instead of me having a base of 50,000, I have a base of 150,000. That is a lot of money. The next step is split between stock picking and index picking. So this is important. As you can see, I'll show you my TFSA here. I've got individual stocks that I buy, and I've got indexes that I buy. The reason why I do this, because with the index, you will never lose. Okay, it's going to go up, right? It's going to contain the winners and the losers, but overall the indexes are going to go up. So you don't need to worry about you picking stocks and what price. So what I do, whatever money I receive, I split it 50-50. 50% is going to these indexes. So I've got the S&P 500. One is hedged for the Canadian dollar and the other one isn't. And I also have the XIC, which is the Canadian capped composite index, which are higher dividend, which I like. So I split it between 50% goes into these indexes, the other 50% I can pick my stocks. I know Warren Buffett and other people always say stock picking is you will never beat the index, but this is my argument against that assertion, right? If you're only contributing to an index, you are not going to be as committed to your portfolio. You're just going to put money one day and you're not going to look at it. In turn, you're not going to deposit as much. You're going to use that the residual income you get to go out. You're going to use it to buy cars and do other things. But if you're actively involved in your portfolio, you are more inclined to buy stocks because, for example, a stock will come on sale. For example, one of the stocks, Crombie, is down close to 2% at this point. If I like the price, right now it's at 13.97. I would like it below $13. If it went under $13, I'm looking for every dollar I can find to make sure I make that purchase. And that also gives you the emotional high of making a purchase, and that keeps you engaged in your portfolio. And that is why I say you should split 50-50, so that even if you've got some losers in terms of those stocks, you still have the index to fall back on, and you will still be able to make money during the crash. The next step is bi-monthly, and I mentioned this is part of one of the steps beforehand. We need to consistently put money into the portfolio and into the market. It will feel painful. You will buy one stock one month, buy stocks one month. The next month the market is down 5%, but it doesn't matter. We must continue depositing money. Keep on putting money. Whether it takes 3 months, 4 months, 5 months, or 6 months, the more you deposit each month, the better will come out in the future. And remember, these are discounts on stocks. So when they start appreciating, you will be leverage is not the right word I'm using. There will be exponential, perfect word, exponential gains because you've put a strong foundation in your portfolio. So I intend on following these tips and showing you exactly how we'll fare out as the market continues to drop. But remember, follow those 5 steps. Keep going at it. If you were there in 2020, you know exactly what I'm talking about. Look at this pain as pleasure, as an opportunity to buy stocks. Keep putting money into stocks you believe in. Keep putting money into equally weighted portfolios, and you are guaranteed to make money over the next 5 years. Remember to like, comment, and to subscribe. See you guys on the other side.